And hello, South Florida. Hello to the rest of the real estate fans all over the nation that listen to the Real Estate Show. South Florida's #1 program about real estate and America's longest running daily radio show, all about the topic of real estate. Hello there, Cindy. And to all of those of you out there also on our Facebook live feed. You know, we're here 5 days a week. That's right, 5 days a week, Monday through Friday. At 5 p.m. Eastern Standard Time, and coming at you 5 different ways. Piped to you via the email, the AM station, the 1470, on the FM dial, on the apps, the free apps that you can download onto your smart device and access over to any one of the radio stations that you choose. In this particular case, WWNN is carried on iHeartRadio, TuneIn, Radio.com, and a whole bunch of other ones. And you can always go to our website where you can listen to it live at 5 at automaticlandlord.com. You can listen to it anytime you want. Just go to automaticlandlord.com, click on the real estate show at the top of the page there. And the drop down will give you the option to listen there live at 5 or listen to any of the previously recorded shows. Going back, usually it takes about 12 to 24 hours for the show to get booked up there. And then it stays there as we have a collection there that goes back literally a decade. So lots of information. You want to binge on some real estate, get an overdose of vitamin real estate, go there. There's a couple of different ways. You can get your daily dose here live at 5. You can get your weekly dose on Sunday nights, where our show is also rebroadcast at 9 p.m. Then they go back to back, all of the shows of the week. So you can catch the whole train of thought that we talk about. You know, every week we start off our Mondays on a mission, talking about a new theme, a new avenue that we're looking at, and talking about real estate to help educate, enable, and empower our listeners to get their piece of the American dream. And I think as you start to listen, if I've been listening to the news the way that hopefully many of you are as well, and listening for not just what they say, but what they're doing means to your investments. There's certainly a push to let's just say redistribute the goods. And so you need to know and understand, and you'll see why real estate is not only the ideal investment right now, but it's going to be an even more important ideal investment going forward. So it's very fitting. We're talking this week that, you know, the theme that we've been talking about has been the concept of equity. And on Monday, we talked about equity. We gave the definition of equity. We gave the formula for equity. We broke it down on Tuesdays, you know, some of the things that you can do to affect the equity, that you can literally create, enhance. And today on our ATM edition of the Real Estate Show, I want to talk about how to accelerate the growth of your equity. Now, remember, Tuesday, I talked about how you can create equity out of thin air simply by being a good negotiator, understanding the real market value, and then either finding a very motivated seller or finding a way to either bring value, exchange value. But the bottom line is that you can build equity into your property from day one on the purchase. You can also systematically pay down the mortgage without doing anything different other than to make your regular monthly mortgage payments. And you will increase the equity, increase your value that you have net of any encumbrances or loans. And the neat thing about that is that there's another way that you can create equity, and that is by, you know, enhancing the property, bringing it up to date, growing the size of the property, and closing a carport, making another room, all of those things. In fact, what's very interesting, and I've been hearing more about this. I mean, I promise you that you will hear things that we discuss here on the Real Estate Show that I'll bet you that you don't hear anywhere else. If you recall, several months back when I was talking about the reduction in the number of cars that people have and the trend of enhancing or enclosing garage and carport spaces to add square footage. Now, if you add 400 square feet, which is the size of a 2-car garage, to a house, where let's just say that it was $100 per square foot, and good luck finding that. I know in the areas that we operate, it's from 250 and on up. So just imagine if you added 400 square feet to your house at $250 a square foot. Now you're talking about a $100,000 increase in value of the real estate. So, and how did that happen? Well, you just made storage space into living space, and by doing the appropriate upgrades, now you've increased the value of the real estate. And that's been made even more important since the pandemic, as the home has become now necessary to work in, work out in, study in addition to sleep in. And quite frankly, nowadays, you're seeing people spend more on expanding the living area of your home by beautiful outdoor kitchens, enclosing screen enclosures or even bigger enclosures, but bringing sort of the outdoor living as part of the indoor living, and that makes the house much more attractive as well. So that is a very good way of increasing the equity. And so this is the neat thing. Equity is something that we can affect, different than when I was explaining how appreciation happens, and that is a market activity. It's not something that one person like you and I can really affect in a large way, but the equity is something that we can. Now, today, what I wanted to do is I wanted to spend a little bit of time talking about how to accelerate the equity. I said before that if you simply buy a house, put your 10% down, and you didn't negotiate any extra value. So you put 10% down, you now have 10% equity. And as you begin making payments to your mortgage, you're paying your mortgage down, right? Well, not so fast. And what I mean by not so fast is not so fast. In a 30-year mortgage, and I'm going to take this example today, and if you're not driving, you might want to take some notes here. If not, remember, these shows are recorded. Come back and take some notes, because some of the numbers that I gave out this week, especially on our Tuesday show and even on our Wednesday show, in fact, every single day this week, you can't talk about equity without using at least some examples and some numbers. And I really, really want you to get this, because it is in those numbers that are really dollars that you grow your wealth and create what is either a great retirement account, potential income in the future and in retirement. And so if you were to go and get a 30-year mortgage today, right? And when watching, the rates have been creeping up. On a 30-year mortgage, that's 360 payments on a $200,000 mortgage, and let's just say that you're around 4%. You're going to have a payment of about $1,000. Now, I calculated these numbers exactly, but I'm going to round this up because I really want you to get the concept more than anything else. So I'm going to pay on my $200,000 house. I'm going to say $200,000 mortgage. Let's say it was a $225,000 house. I put $25,000 down, 10%, and have a 90% mortgage. And I'm going to make believe, for the argument of this conversation, that there's no private mortgage insurance. We're just talking about the loan itself. The payment is about $1,000 a month, a little bit over, about $1,013 a month in this situation, but $1,000 a month for that $200,000 loan. On my $225,000 house, I'm going to pay back to the bank $360,000, nearly twice the amount. In fact, that's because interest rates are super low right now. Normally, you'll pay between 2 and 3 times the original amount of the purchase price of the house back to the bank on a 30-year mortgage. And as always, I hear someone in the background saying, but Eric, who keeps a 30-year mortgage for 30 years? Some do, but many, many more don't. And the sad news that I have to answer is to that is that all they're doing is starting the clock over. If you refinance a mortgage 10 years later, well, now you got a new 30-year mortgage. You just started the clock all over again. If you sell and buy somewhere else, again, you started the clock over again. Now you got another 30 years or 360 payments ahead of you. And what I want to talk about today is how do I, number one, not pay the bank 360 payments, and how do I accelerate the growth of my equity and the shrinkage of my mortgage in a systematic, measurable way. In fact, I can even show you how to do it without having to spend any money differently than what you're doing in your world today. So if you want to learn, and I have a special report now for this topic here on how to shrink your mortgage faster, in fact, paid off in 1/3 or 1/2 the time without changing your monthly budget. And so if you want to get that information, text the word equity today, Thursday, and text it to our regular number, 561-861-2366. That's the word equity to 561-861-2366. We're going to go ahead and take a quick break. When we come back, I'm going to break down these numbers. I laid the foundation, $225,000 house, 10% down payment, $200,000 mortgage, about $1,000 a month just for the principal and interest. This is an amortizing loan, and that should be clue number one, that things are not exactly as you would think. When we come back, I'm going to break it down, and I'm going to show you the solution to this problem that faces a lot of Americans. Anyway, don't touch that dial. You're listening to The Real Estate Show. My name is Eric Willner, and I will be right back. Happily checking in. Hey, Susanna, thank you. Simone from Boca Raton. Saudades. We got Cindy. So we got California. We got Florida. We got North Carolina. I like all the emojis and everything. Thank you. Let's see. Can I do something? Let's see something. Pin comment, bring. Yep. Let's see. 861-2366. Real Estate Show. So how's everybody doing? Scary stuff coming out of Congress right now. I hope you guys are paying attention. And welcome back. For those of you just joining us here on The Real Estate Show, my name is Eric Willner, and I am your host, and we are here live Monday through Friday, 5 p.m. We are here talking about all things real estate, but this week focusing on the concept of equity, how to understand it, how to measure it, how to create it out of thin air. We covered that on our Tuesday show. We talked about how to build it in other ways so we can actually force the increase of equity on our property from the physical side. We talked about improvements, enlargements, and things like that. And now I want to talk about accelerating your equity from the financial side. And think about this. Imagine if I did all three. I negotiated equity into the property when I bought it. I improved the property and created additional equity in the process. And then I set out for the remaining periods, so phase one, negotiate, phase two, uh, improve and rehab, and phase three, financially accelerate what I'm doing. Because here's the thing, I laid out the foundation of the deal that I'm talking about, and how the numbers work. And we're talking about a $200,000 mortgage, a 30-year payment schedule, 360 payments of about $1,000. So on my original borrowed amount of $200,000, I'm now paying back $360,000, almost twice. And that, like I said, it's only almost because of the historically low interest rates, which now are on the rise. And you can see with the new things that are going through Congress and this huge $1 to $3 trillion, new bill that's coming out, between the inflation. Did you know what the inflation was? 8% this last 12 months. I just heard it on the news today. 8% inflation. And you're getting how much in your bank account? 0.08, right? So inflation is eating up your money, at the rate of 10 times faster than the interest rate that you can get. So you've got to do something completely different. And that's why I'm telling you that real estate is the way to go. Number one, because real estate is a hedge against inflation. Number two is that you're not getting 0.0 whatever rates that the banks are paying right now. So now that I have set the groundwork on there, and now you understand what the dilemma is that most Americans face, is that when they borrow on a mortgage, they're going to pay back between 2 and 3 times what they originally borrowed. So it's kind of like buying one house for you and 1 to 2 houses for the bank. But there is a solution. Now, amortization schedules should be the first clue. It is not a straight interest only payment, which then wouldn't reduce the principal. It's a payment that pays a little bit towards principal, and then by a formula, the rest of it is all the interest. So you're going to pay 1/12 of this month's of this year's interest, plus a little chunk, little tiny contribution, just a little, like they said back in The Godfather, just something to wet their beak on the equity side. So your equity in the first year, after you paid $12,000, that's 12 times the $1,000 a month payment, 73% of that $12,000, or $8,934, went to interest, gone, spent into the ether, does you no good other than allow you to stay in the house. So it's kind of like paying rent. $3,000, 3 of the 12, like I said, 73%. So even though you have these low interest rates that we're having, because of the amortization schedule, the algorithm that the banks have set up to amortize the loan over 30 years, and there's a formula that was invented a long time ago. Hey, Felipe. And now at the end of 1 year, I've paid $12,000, but I've only added $3,000 worth of equity. And you would think, okay, well then how about in year 2? What happens? Well, it gets a little better. Now I pay 72% interest instead of 73% interest. So I pay $8,700 towards interest and $3,400 towards principal. Now, fast forward, because we don't have time to do it year by year, 20 years later, okay? And this is probably one of the big misconceptions. You do not pay off half your mortgage of a 30-year mortgage by year 15. You're not even, 40% paid. By year 21 is about where you hit that halfway mark. But here in our example, in the 20-year mark with the low interest rate that we have, I've paid $243,000. That's 240 payments of the 1,013 that I was talking about. And my balance is now halfway. I'm at 99,000 and change. So I paid $240,000 more than what the house cost me, and yet I still owe 50% of the balance. How do you like that? And then again, at the end of 360 payments of 1,013, actually comes out to $365,000. And now I have a free and clear house after 30 years. Here's the interesting thing. And now I'm giving you the hard example of the mortgage. The average household spends about 34 and a half cents of every dollar on interest payments, be it credit cards, car loans, boat loans, jet ski loans, whatever, all of those things. But according to the Wall Street Journal, who did a research on there, and I will tell you that because I read that article years back and I look at the numbers that people are spending on their mortgages and their cars and their credit cards, that number is often exceeded, that people pay more than. So think about this. If you're paying 34 and a half cents per dollar on interest, you have to pay 20 to 30 cents on the dollar of your income for taxes. That means 65, 70% of your money goes out the door on interest and taxes alone. What if someone could show you how to stop overpaying interest on all of your interest? I'm talking here about the mortgage, and I can cut that mortgage cost, the interest, I can cut that cost in half if you're willing to read the report that, like I said, all you have to do is text the word equity, and I will send you out the report for this, and I can show you in yours. In fact, I'll also give a free analysis. You show me, I'll send you the report. If you like the report, then what we'll do is we'll talk and we'll run your specific numbers. And if I can't save you money on your mortgage, then I'll buy you lunch. How's that? So I think that if you could get rid of that 34 and a half cents of every dollar that I earn that I have to pay off in interest, I could literally change the lives. I give you a 34.5% pay increase if you just follow the steps that I'm talking about. Now, here's the question. Why do most people fail to reach their goal of financial freedom by the time they retire? Do you know, according to the Bureau of Labor and Statistics, the number of people that retire financially independent is about 5%. The other 95% of people either die by age 65 are either dead or dead broke, living off of Social Security and help from their family. The problem most of us have in life, number one, is that we don't have access to that information. You're getting that information right here, and you can have it for free. Just text the word equity to 561-861-2366, and I will send you a copy of my report, plus even a sample. The problem most of us have in life is that we are generally too comfortable, right? We think in terms of, oh, I can afford that payment this month. We don't think about the giant cost over time that all of that interest, like I just showed you, you're going to pay $365,000 back to the bank on a $200,000 loan, and that we're generally comfortable enough and busy enough that changing something in our lives is just easy to avoid. It's easy. I'll get to that, and today becomes tomorrow. Tomorrow becomes next week. Next week becomes, here we are in the year 2021. Do you remember when they were talking about the millennial, when we went from 1999 to 2000, that all the dates were going to end in 00, and therefore ATMs and gas pumps and nothing was going to work? That was 21 years ago. Think about that. And here we are, still doing the same financial merry-go-round, most people, and that's why they end up at the end of their lives still owing on a 30-year mortgage, still paying off credit card debts. And this report will show you exactly how to stop that, because when it comes to making wise financial decisions, generally we take the easiest path, not the best path. And I want to show you the best path out there. So today, what are your options, right? Number one is you can pay the minimum payment. Stay on the treadmill and stay in the rat race, as Robert Kiyosaki used to say, and just keep paying the minimum payment, and you'll be eventually debt-free if you live long enough. Or you can refinance or do debt consolidation, and that's a short-term solution, but it tends to end up back in the same place. There's bi-weekly payments, an interesting idea, but not the best solution. You can send extra money to principal. If you would do it on a systematic basis, that would be great, but things happen and life changes, and we just don't tend to be that disciplined. In that case, you probably need something like a mortgage personal trainer. And I'll show you how to get one of those, an online personal mortgage trainer. Text the word equity to 561-861 2366. That's 561 861 2366 to get that report. We'll talk about the snowball effect, the avalanche effect on ways to pay off interest. But most of all, it'll all be in there in that report, which is absolutely free and comes with no strings attached. Anyway, the music is in. That means I'm out of time. I hope you enjoyed our ATM edition of the Real Estate Show. We got a lot more. I'm going to wrap everything up in our Friday edition of the Real Estate Show, coming here, same place, same time tomorrow. Until then, this is your host, Eric Willner, signing off. Drive safe, wash those hands, and make it a great day. Bye-bye. And thank you for that, Suzanne. I appreciate that. Mark Mackey, how are you doing? And there it is. Another wrap, another show in the can. Do you know that they used to have tapes, both radio and movies, and they would save them to prevent them from getting too humid or damaged. They would put them in a can. And that's where that expression comes from, which I still picture it because I remember seeing those film cans, and I thought that was kind of interesting. And I don't know if using that expression dates me, or whether people still even use that expression regularly, and if they understand it. Anyway, good to see you, Cindy, Felipe, Susanna, Mark, and there's my next call coming in. I'm going to have to wrap it up here. Please give us a like here on the Facebook page. Smash the share button for me, please. I appreciate it very much, and I'll see you guys again tomorrow. Bye-bye.
Oh, you gave me a heart attack.
What happened?
Well, when the phone rang, it just gave me a heart attack. I was.
That means he must have been doing something wrong, right? He had a guilty conscience, and then suddenly he figured, "Oh no, busted."
Oh no.
Yeah, that was it. I was. That's right. Anyway, yeah. So it just broke me out of my thought, and I was like, ah. Okay.
Saved you. She saved you.
Yeah.
So if it's okay, I just jumped on really quick to give you a positive update for today.
Oh, good. Finally, some good news.
So yeah, today was kind of a shitty day in some respects, and so that was a good piece of news. But I coached Juan, what to do, what to say, number one, and made sure that he showed up in court with his Sunday best outfit on, and humility in one hand and his hat in the other. Then I told him to have a printout and ready to be able to provide the judge with the copy of the emails, and particularly to emphasize the fact that the bank just said that they're getting a brand new appraisal on September 28th. So they can't do a judgment because we're still working on it. So apparently the judge bought into that story. And I also told him, and I was on standby, and I said, listen, I got the Zoom code here. If you just text me and you need me as a witness, and tell the judge that you have me as a witness, that we've been working on it for a long time, and that the lender is taking a long time. And the bottom line is the judge postponed a sale date until after the new year, January.
Okay, cool.
So full speed ahead. I'm glad we didn't say anything to Sylvia or any of those people about the judges, so they won't know any much the better.
Yes, I agree.
So that's my report.
Okay, so I guess we'll wait to hear back from them, and we'll have to provide them with all those documents that they requested again.
Right. So now I'll do my part. I'll go ahead and get Juan to re-sign the listing agreement, and let me know if there's anything else that I need to do. But I think a lot of it is in updating your proof of funds letter and whatever stuff that they requested in that email.
Yeah. So okay, I'll go over the different things, and then get TC to prepare the documentation that they prepared last time, basically.
Yep.
We'll just update the date.
So at least that was good karma today. So that was good.
Yeah. change. Good karma. Yeah.
All right.
Canada's having bad karma, but that's okay.
Well, why does Canada having bad karma?
Because Trudeau is still prime minister, and now he said that you can't fly as of October 30th unless you're double vaxxed. So,
Oh no.
the dictator. Well, he's not running anything anyways. He's kind of like your president. He's just a puppet.
Well,
But,
if this makes you happy, because of course misery does love company. They averted temporarily. They got I guess would be a 3-month delay in our debt ceiling, so that they could still negotiate on the $1 to $3.5 trillion let's burn money party. And
that won't cost anything.
Well, the thing is that we print our own money, so it doesn't matter. We can just do that. But today they announced that we had I can't remember whether it was 8 or no, we've had 14% appreciation in real estate since last August, and 8% inflation. So in reality, real estate has appreciated about 6%. But for all of those lovely seniors who live on fixed income and fixed interest, earning 0.0 something percent on their savings and CD accounts, they're getting demolished.
Yeah.
And to make matters worse now is that they're talking about putting a limit on retirement accounts, so that if you grow your retirement account past a certain dollar amount, then it will be taxed. So what the Roth IRA, which we have here, which is you can put money in after tax and allow it to grow and then take it out tax free. Now what they gave it, they are now getting ready to take it.
Yeah. Well, I know Jeffrey Watson. I don't know if you know that guy. He's been talking about that a lot, trying to get people on the battlefront to stop them from doing that.
Yeah.
But we'll see what happens there.
Yeah.
I mean, we have a similar thing in Canada. It's called a tax-deferred savings account, TFSA.
Mm-hmm.
And it's the same thing. You can put in a limited amount of money after tax and then take it out tax-free. So growth is not taxed. And, I mean, they still cap it at 10 million. But still, I mean, how many people actually go above that number anyways? It's not really going to give them much.
Well, that was the counter argument I heard, is that what that will raise is like a drop in the bucket versus the interest accumulated with all these expenditures. And now they're talking about giving out free college. They're talking about giving out forgiving medical bills and all that other stuff. So I feel bad for the people who actually worked and paid for college now.
Yep. Exactly.
Me included.
Are they going to get refunded? No.
Oh, sure.
So
absolutely.
It sucks,
Anyway.
I call that the Peter Thiel rule. I don't even, that guy just got lucky with a few investments in his Roth IRA. That's about it, And because of this one guy, they want to limit it. It's stupid.
So, you talking about the guy from PayPal? Yeah. Well, he played. He played. He used the rules. He played a smart game.
Yeah, and he got lucky, because the investments he put in there that really paid off. They were highly risky, but they paid off.
Mm-hmm.
Most people won't do that.
Absolutely correct.
And, and risk losing it all, right? He could afford it because the guy already was a multi-billionaire or millionaire anyways, so he could afford to do that. But how many people can actually do that?
Yeah, so, and that's why we punish the smart and benefit the dumb.
Yeah, and the rich people will still find ways to avoid paying
taxes. Of course,
they'll do it another way. They'll find something else.
Yeah. So they're talking about doing really restricting self-directed IRAs here. And but it convinces me, and that's why, with all this crypto everything and the government's ability to reach in and freeze or take or tax your retirement accounts, you definitely want to have real estate. There's nothing like real estate.
Yeah, I agree. Okay. Well, anyways, thanks for the update.
You got it.
It's good news. We'll work on that. Well, I'll work on my part, and then the team will work on it tonight and next week.
You got it.
Everything sent in.
Bien.
Cool.
Muchas gracias.
All right.
That's Swahili for thank you. All right, you guys. Take care.
Thanks, Eric.
Bye.
Bye.
Thanks, Eric. Thank you.
Bye. Look at that. And did I do it again? Tell me I did. Yes. I love to forget how to say end stream.